Welcome to today's webinar. My name is Yakub Ibrahimov and we will be discussing trading Greece, and we'll be discussing about the opportunities arisen by the Greek trouble that the world economy is facing. This webinar is expected to be interactive and it is recorded, so you may request it from your personal account manager at Orbex, which is the broker sponsoring and partnering this webinar. We will have a number of options discussed in today's webinar, starting from the history of Greece trouble, when and how it evolved, the opportunities that we have now, and the opportunities that we could expect for the next week and possibly for the next 3 months. In the webinar, we will also discuss some of the bank's opinions about the well, it's not exactly the crisis yet, except the crisis inside the Greece itself, but a possible expected crisis that we would expect to see or to have developed based on the results of this week's referendum in Greece. But before I go ahead and start the webinar, let me bring the overall risk disclaimer for your attention. I'm not going to go through and read the complete risk disclaimer. However, just the part that trading forex or foreign exchange on margin carries a high level of risk, and therefore it may not be suitable for investors. Before you decide to trade forex, you must be aware of the risks involved, and if you need, you should seek a third-party advisory on forex trading. Who am I talking to you? My name is Yakub Ibrahimov. I'm a professional forex trader and trainer, and I'm the author of Forex Not for Dummies. It's a trader's journey book, which is gonna be coming alive towards the end of this year. I've been nominated by multiple third-party media agencies as the best trader of the year since I joined the forex industry and made a pretty handsome amount of profit out of the industry since 2005. And today I'm working with multiple media agencies mostly, and financial institutions. I'm dedicating my time to Orbex education as well, to make sure that you as the traders get the best available research and education possible. Going back to today's webinar, trading Greece. Well, I'm not going to trade the Greeks as a country, but I love seeing the opportunities coming out because of the Greece crisis. And the background to Greece crisis is not just since 2008, as many media companies are outlining out there, like you would see CNBC and CNN and I don't know, Bloomberg commenting that Greece has been doing this since 2008 and doing that since 2000, this, that. The main root of Greece trouble starts from the Maastricht Convenience, that the meeting took place in Maastricht, the Netherlands, in 2001, where every European member state then was given an opportunity to present their own economy and outlook for the coming period. That time in 2001, EU member states were given a target of maximum 3% debt to GDP ratio. Okay, sorry, 3% deficit availability or level, let's put it this way. And debt to GDP ratio was set as 60%. Greece then had, well, marginally above the 3% deficit, and their debt to GDP was not 60% but 126%, basically more than the national GDP. And the main trouble started just from there on. Okay, when you put an indebted country into a European Union or into a single currency union and expect them to just perform the same level as Germany or the Netherlands or the other major leading European countries, it just doesn't work that way. You always have some trouble expected. And when the world economy was hit by the crisis in 2008, obviously the right away results were seen on those of weaker EU member states such as Ireland, such as Portugal, and of course Greece. We saw in 2009 the state revenue of Greece dropping by some 15% in just 6 months. When we saw the ECB monetary policy getting into action, creating more tighter organizational activity carried out by the European Central Bank, we saw the Greek recession even going worse, and the debt to GDP ratio rose from 126%, which was in 2001, to 177% in 2009. But Greece, the issues did not just stood there. Greece continued to borrow heavily in order to overcome so-called crisis by then, in order to be able to finance their heavily public sector jobs. Greece is one of those few European countries that there is not many real entrepreneurial or business activity going on, and it actually feels a little like socialism per se, in a way that there are too many public sector jobs, there are too many pensioners, and the social benefit people dependent on social benefits is just way too much. This in itself sparked an increased consumer demand because there is no local production manufacturing, and therefore when there is no local manufacturing happening in the country, it leads you to import more and more from outside your own country, creating bigger and bigger deficit inside your economy. As borrowing increased, the tax revenues also increased. And as the crisis increased, the tax evasion also increased. And deficit in the Greek economy increased from 5.1% in 2008 to 12.7% just 6 months into 2009. Bonds were downgraded, and obviously people lost their faith in the Greek economy. But what actions did the Greek and the European member states took was the main, question mark actions. I have my own opinion. These things are public information. I'll also share my personal opinion just in a bit. To prevent a spread of crisis to other European states, such as Italy by then, France by then, and Spain, of course, the European leaders decided to basically get into a bailout program, which they gave 110 billion euro bailout to Greece, which was done by Troika. Troika is European Commission, European Union, and the IMF. Okay, ECB purchased out of the whole sum 48 billion Greek bonds to reduce the bond spread and increase the confidence among the local and international investors towards Greece. And in 2010 budget to meet the program targets failed. We saw by then all those protests in Greece that you have on Google if you type Greek protests and so on. And June 2011, Greek parliament approved next austerity measures and structural reforms. In July 2011, European leaders announced a second round, a second, more suitable terms than the first bailout program, which enabled Greece to get another 109 billion euro bailout funds. October 2011, European leaders agreed to cut Greek debt by 50%, and well, I believe it was too late or too soon in a different perspective. But the biggest trouble started for Greece by Tsipras, Alexis Tsipras, the current prime minister of Greece, and his party Syriza. Later 2014, towards the end of the year, there was a clash. There was no government in Greece, and the anti-bailout party Syriza won the elections by by a massive margin difference. There are some economists out there saying that Tsipras had a hidden agenda which he didn't really publicly announce the public and the creditors. There are some saying that Tsipras had a hidden discussion with Russia, as you know, it wouldn't surprise me actually, since Russia is is banned by major trade deals from Europe because of the Ukraine issues, and Greece would also give them an opportunity to bring the Russian gas to Europe at a cheaper cost, basically, than going through the other anti-Russia countries out there. The results of all these things that we have so far ended Greece being in debt to international creditors by some 323 billion euros. Okay, this is a huge amount of money in a way that the total population of Greece is just 11 million people. When you make, I'm gonna exit this so that we can write on the section. When you make a basic mathematics, this is just to illustrate the number of zeros. But the Greek has only 11 million inhabitants. So when you look at it, if you delete all these trees, I mean zeros, and also get rid of, let's say, this, it makes on average every single Greek national being indebted by 3,200 more or less euros, which is a huge amount of money in itself. And you can see this is copied from independent sources, and it was a similar thing was also published by Bloomberg earlier. Out of the complete debt, the biggest debted country is Germany. Then we have France, 42 billion. Then we have Italy and other European countries. You would see two things over here that catches my attention. First off, we have Spain basically borrowing Greece some 25 billion euros. And on the other hand, we have also Italy borrowing another 37 billion. I will bring you just back to 2012, when the things in Western Europe and Southern Europe was not that great. You might remember the trouble in Spain and Italy. Spain and Italy are not really well-doing countries themselves. So if anything really bad happens to Greece and Spain plus Italy losing this much of money, it would hit them as well in some way. Even if ECB jumps in and starts printing money, it will still not become the same, and there will be the possibility that the the leftist parties from Spain and Italy will jump in saying that, okay, if Greece can do it, why don't we do it? There is, by the way, just like the Syriza party in Greece, in Spain there is a party called Podemos, which when you translate to English, uh, it comes from the word poder. Those of you speaking Spanish, poder means can. Podemos means we can. So what they say is that we can exit Europe, and they are becoming pretty well well respected recently because of the troubles happened or created by Greece. Now let's look at the part what would happen or what to expect from Greek referendum. Okay, if it is no, the answer in this referendum there is basically yes or no. I will just go a little backwards. Tsipras took as much as 5 months to waste the ECB and European leaders' time. 5 months. For me, I believe it is waste of time in a different perspective, because from day one, the international creditors, including European leaders, were just straightforward. We want to see change in Greece. We want to see change in order for us to come and give you more money or make some changes to the terms of the bailout program, which was agreed by the previous Greek government. But what he did was each time he said, okay, more we are going to come up with a new proposal. We are going to come up with a new proposal until the 30th of June. 30th of June, which was this Tuesday, was the deadline for IMF payment. It was not a very big amount of payment. It was less than 2 billion euros. But nonetheless, it was quite a sum of money. So when Greece would have lost, or they have already lost the possibility of paying to IMF, meeting the deadline, it would mean that they would go default, automatically default against IMF. Okay, IMF is International Monetary Fund. When they are not able to pay, the default does not take into become active right away, or it doesn't become legal from day one, but after 30 days according to the terms and conditions. That being said, if Greece is default against IMF, which is pretty much secure now, it means that they cannot get other fundings from other creditors such as ECB, because ECB has also the liabilities against IMF, and they need to work together. So it appears that it was just in a way that it was a planned action from Tsipras. Why I say so was that European leaders indicated that they were ready to go for extra negotiations and possibly enable to change the terms and conditions of the next bailout, or even go into discussion about next bailout, if Tsipras and his Syriza party was to go ahead and campaign for Yes campaign. Yes campaign is support new austerity program, support the Greece being in Europe. That's basically Yes campaign. But what Tsipras did was basically saying that European countries do not want Greece to excel, and they want us to fail again. Therefore, we don't want a yes answer for the new austerity. He went even this far, saying that European leaders are evil. So what would happen if the referendum comes and becomes no? First off, IMF already declared that the results of this referendum, whether it's a yes or a no, would be invalid. That's the announcement from IMF. But if the results come as a no, it would translate as an exit from Eurozone, Greece exiting from Eurozone. Okay, this would be a possibility. It would be hard to find a deal with no context between Greece and the other creditors. But if there is a yes, Tsipras Tsipras is most likely going to resign, and there might be though a possibility between Tsipras party, Syriza, and creditors to come up with some kind of decision, which I don't really find it possible at this given moment. Now, if you could just get a little closer, this is the report or research published by Bloomberg earlier this week. On Monday it was published. If you look at it, we have three deadlines over here. The first one is the 30th of June, which is past. Bailout expires, IMF payment due. The payment was due, and just over the night, Greece announced that they are not going to be paying it. July the 5th, we have the Greek referendum. If the Greek referendum ends up with a no to creditor proposals, there will be three options. One would be direct with the government could say that we are exiting Europe. This is one option. Second one would be the European leaders would still go for negotiation. And the third one would be direct interim deal, some kind of straightforward offer from Europe that Greece would have to take in order for them not to leave. If the results are yes, the credit basically we would have again three types of deal. One would be new negotiation, no deal. Another one would be new negotiation with direct interim deal. And the third one would be new elections or referendum to select a new government. Okay, if the new referendum would fail still to select non-anti-bailout program party, we would still see Grexit. But if they all go through in an interim deal or an agreement, we would see the next bailout. But it would go. We would basically have to see some kind of agreement between the parties before the 20th of July, as we have a larger payment to ECB this time, which Greece is most likely not going to be able to pay. Okay, now look at the program over here. Grexit, what next that we could expect? Now imagine that the government and the country decided to leave the Eurozone. We have some questions over here. I will be answering all of them towards the end of the webinar. Just let's go through the theory part. The most interesting part is going to be for us when we go through the charts and discuss the possibilities. Well, but we need to understand these potentials over here in order for us to be able to discuss the charts. So let's say the government decided to leave the Eurozone. A few days before the Eurozone, we would see the banks being closed. Even the ATMs would not be able to give the 60 euro that they are giving right now. Immediately after the decision, the government would need to start printing their national currency new. Probably they would call it as drachma like it was before the euro. The week before the exit, the government would enforce and assist redenomination of all the domestic bank accounts, wages, prices, etc. Meaning everything over a week would change from euro to drachma, their national currency. the week before the exit, they would announce the intention to default on at least half of the public debt and start negotiation with the Troika. The week before the exit again, redenomination of the private international debts into drachmas would be possible. They would also announce inflation targeting and strict fiscal rules for the future. Possibly on the exit day, they would announce the reinstatement of drachma at a parity, which would mean that 1 drachma would be equal to 1 euro. They would reopen the banks and impose capital control. Few days after the exit, they would recapitalize the banks and larger firms with euro-dominated debts using QE may it be necessary. Up to 6 months after the exit, electronic transactions in drachmas, small amount of euros, etc. would be available. And about 6 months after the exit, all euros replaced with drachmas and conversion rate would have been complete. How realistic it is? Well, it is pretty realistic. Let's put it this way. There are three alternative scenarios. One would be creditors suggest Greece could provide alternative proposal as long as they are sufficiently concrete and quantifiable. I doubt that they'll do it. If they were to do it, they would have done it much before, not wait until this time, unless we see the Greek government still playing their game theory, which they seem to be very, very keen on it. If you look at the Greek government, they are trying to play the game theory. They want to apply the things that would kind of put the creditors into a yes answer way. The second option would be last minute deal by creditors. Greece stays in EU and pays its debts, etc. This would be somehow possible, especially now that we see how some European countries are on the line, and of course the ECB and the other European leaders would not really like to see their country and their union to break it into pieces because of one small economy. And the third one would be Greece defaults but does not leave euro, using the euro without being a member, which is very, very, very unlikely. If Greece leaves Eurozone, they would probably leave euro also. So that's about the theory. Now I want to share some of my thoughts as well. If you look at the rumors, quite often in scenarios like the Greek crisis that we have right now, often we have the truth to some of the rumors. We saw just 2 weeks ago the Russian ministers commenting that Russia is ready to act if Greece needed the Russian help. Well, what does that mean? Russia is ready to help if Greece needed a help. It means that there are some kind of back discussions going on. There is even possibility that, because the Syriza party came to the power when Europe needed them the least, okay, and they came when Russia needed them the most. So there is a possibility that there is a it's a conspiracy theory, all right? It's not really a backed up theory that I'm sharing with you. That's why I said this is my personal opinion. So if you look at it from that perspective, there is a feeling that possibly Russian government has something to do with all the game being played behind the Greek issue, and of course it would be to the Russian benefit at this given moment if European Union breaks into pieces, so that Russia could start ruling at least the Baltics region and the other Eastern European regions from with their oil power and so on. Is it possible? There is some 20% possibility on it, but there is always some game being played. So it's not always what we see or what we hear. Okay. In my calculation, I made a small mistake, but the debt per capita that Greece has is just over 30,000 euros. If thanks for noticing it, Alex. Adrian is asking if Greece leave Eurozone will be better for Euro economy, so Euro will rise. Well, we have to really discuss, look at it from a different perspective, Adrian. But let's first look at the charts from technical perspective, and then we are going to discuss all these questions more in detail. If you could open your MT4 just to see what I'm going to be discussing with you, it would be great for you as well. If you are using two screens like many other traders, it would be highly recommended. So first off, when you are into a crisis just like it is right now, you look for safe haven currencies. What are safe haven currencies? We have Japanese yen, which is a safe haven currency, and we have US dollar, which is also safe haven currency, and finally we have the Swiss franc. Swiss franc is a little different scenario for the fact that the Swiss are committed to support euro as much as they could. Okay, so I'm not going to include much of the Swiss franc, but look at the Japanese yen. Japanese yen is very reactive to what's really happening in the market right now. If you look at it, every Japanese yen pair pretty much has depreciated. Well, if you look at it, Japanese yen itself has appreciated. As an example over here, on Monday market opening from Friday, Australian dollar Japanese yen moved by 200 pips. And since then, it's just moving sideways because everyone is still waiting for Sunday, most likely, which is going to give another major gap over the weekend as well. Then we have the US dollar. If you look at the US dollar, let's open USD CAD or something. If you look at the US dollar, you would see that from Monday, the US dollar started to appreciate as well. USD CAD, 300 pips movement. Generally, this is not really common for this currency pair to move by 300 pips in just short period of time without having major market developments from USD or Canadian dollar. Now you can see that it is happening because of the fact that USD is strengthening as a safe haven currency. Okay, but what makes it interesting is the outlook by some of the, let's see, by some of the big banks. Some major banks like Citi, they mentioned right after the market opening saying that we will not, they said that the opportunity we see in the Greece trouble is in the long positions that we have in GBP CAD, pound Canadian dollar. And look at the opportunity that they mentioned. Their analysis came on Monday around 10 o'clock, at least the ones that I read. After 10 o'clock, since then, basically, long positions that they were talking about, they have moved by 250 to 300 pips movement. Another opportunity that some of the big banks are talking about is GBP Australian dollar. This is not as major movement as other currency pairs, but they mentioned, some of them, that they expect the GBP Australian dollar to be bullish, and you can see that well, it's a little bullish, not really major. And finally, GBP New Zealand dollar, if you look at it, is another pair that it was mentioned to be bullish one. We have some 400 pips movement. But what can we really expect from euro dollar? Because we are discussing about Greece, we are not really discussing about other currencies. First off, those of you trading with me for the last 5 years or more, you would understand that I heavily rely on drawing tools rather than some indicators and so on. And I also follow moving averages. When I apply all these things all together, I see the following. First off, we have a support level from, if you go from here even, this trend line, rising trend line, indicates the support. You can see that each time it touches it, it reacts back. Let me just illustrate it for you. We have one time over here, second over here, third over here, fourth over here today, and there was more over here as well, because the line goes just like this, if you want to put it from earlier time period. But on the other hand, there is also a resistance level coming up from this level. 1, 2, 3, 4, 4 candles touching and reacting on it. So for us to be able to enter market in either direction, my suggestion for short order, those going for short, would be to enter as close as 61.8% Fibonacci level, which is at 1.12, or above it, with the targets towards 1.0770 level. The reason why I say 1.0770 level is because of the following outlook that I have. I'm going to delete all these so that we can just look at it from relatively different perspective. If you look at the market, I see the following strange movement. Well, it's not really exactly strange. This is on weekly time frame. I don't really love harmonic movements, but if you look at the market, we have an inverse head and shoulder possibly. This is the head, and this is one shoulder. This is another one. So how the market generally moves for the harmonics is just like the following. You have 1000 pips movement here, then we have 1000 pips more or less movement here for the head, and generally when the shoulder is the final shoulder is confirmed, the level from the head to the neckline is supposed to be from the shoulder to the next headline. Basically that gives me, from technically, this is technical analysis, not backed up by fundamentals, makes me believe that there is a possibility for us to see euro dollar to jump to 1.19, 1.20 zone. This is just a technical analysis once again. Of course, it could become reality if we would see some major yes answer from Greece this weekend. And there is a possibility for it no matter what, because the people understand that they cannot, with their current government, they cannot really do anything. And if they leave, maybe it would be good for them on a long run, but on a short run, they will be in a very bad condition. There will not be free trade agreement. There will not be major other agreements that they have, and most of the activity will become invalid. There would even be possibility that they wouldn't be able to, or the Greek people wouldn't be anymore go ahead and work in other European countries if they are out of European Union, because European Union is only for is with free labor movement and so on, just for the member states. So because of it, as we have major unemployment in Greece, we should not really expect the Greek to be in favor of leaving Eurozone. Okay, now let's go through your questions, and we will get back to more of these discussions just in a bit as well. We have Go Min mentioning that Russia wants their port so badly, include China, I heard. Well, if you are talking about Russia, Russia is being kind of blockaded by Europe. They it's Europe is one of their biggest market, and when they end up in a trouble like they have been, and they don't want to let go from, they don't want to have Ukraine let go, they don't want to ease up the tensions. What can they do is that, for me, my personal opinion is create another hotspot inside Europe, so that Europe starts focusing on that level and they forget about Ukraine. This is one possibility. And on the other side, they of course need to find another way to get to Europe. Greece would be one option. They also could use China. China is a major economy right now in the world. They surpassed a US economy. So why not to make an agreement with Chinese as well? And one thing combines China and Russia together is that, and also Russia, is that they are, well, China is anyway a communist country. Russia is a former communist country, and Greece is a majorly socialist sided country, although they do not say that we are a socialist country, but the mindset of the Greek people historically is very, very socialist. You can see it from the discussions even right now. They say they don't want to let go the public expenses, which is the biggest trouble that we have. Now, we have another question. How probable do you think is Grexit? Alex is asking. The probability I have at this given moment is 50-50, because there is it all depends on how the local action is driven, how the local campaign is driven. If the local campaign, or especially if the conspiracy theories about Tsipras and his hidden theory is really true, he will do everything possible to pull Europe, Greece out of Europe. Kishore is asking if Greece exits, is there recession or depression expected? I actually believe that if Greece is out of Europe, Europe would be in a better condition than it is right now. Because every 2 years, 3 years, we have Greek government either dismissing the parliament, or refusing to pay, or asking for a new bailout. It cannot go this way. The problem needs to be solved from its roots. If they want to really solve the issue, they have few options. Let Greece leave Eurozone, or forgive Greece all the debt that they have so that they can have a fresh start, or uh, make a major change, just like they did in Ireland and other countries, so that the government and the people, the mentality could start changing towards more entrepreneurial part of the country. Would push more business to the country. Foreign investment should come to the country, so that more non-public jobs would be created that are not dependent on the government, but are dependent on the innovation and technology. That's the feature overall that I believe is. Okay, we have more questions. Another 5 trillion. Okay, Michael is asking about, well, commenting. It's not really a question. Another 5 trillion. We are talking, Michael, about trillion first. 24 trillion magic number that we have, as Michael says, for the US to be default. We are in the 20 trillion. Well, US, you cannot really compare US and Greece being default. First off, US is one country. Even if they are default, they can still start pumping more money, print more money, because of the fact that it's their own country. It's one country, one central bank. It's the Fed printing money. Maybe the government would be shut just like earlier a couple of months ago. So one would be printing more money, but Greece doesn't really have that option. That's the reason why there are these discussions that Greece should go back to drachma, so that they could balance up their operations, not being really dependent on ECB, but be dependent on themselves. But even then, if their money would be tied up to euro, I don't really see that being possibility. You call it euro or drachma, it's still the same thing. Okay. Suppose Greece left euro, then next 6 months where you saw the price of euro. If Greece leaves the euro, and there is not much of action from Spain, that's the main attention point right now, we would still have euro dollar being traded between 0.95 to 1.10 level. That's my range level that I have in mind. If euro ever goes to 0.95, I'm buying it. That's my buy level that I have in mind, because all the major banks right now, who are the market makers, they define the market developments and so on. All of their targets are towards 1.05 to 0.95. Lowest one is 0.95. So I would follow up with them, but 0.95 level would be for the next 3 to 6 months would be the lowest level. My maximum level would still be 1.20 level. That actually the level of 1.10, 1.15 for euro dollar is pretty understandable and pretty acceptable level. Okay. We have Alex asking, if they vote no, what's the probability of the Grexit? If they vote no, the probability for us is most likely towards maybe 70%, 80%, if not 85%. It's not about the voting, it's about the actions or the reactions being given by the other creditors. As none of the European leaders are doing anything right now. They are not doing anything at all. They are on hold. They indeed did have a secret or private meeting in where they did not involve Greek ministers or Greek government, which makes me believe that they were discussing about Greece and the next steps without Greece. If you are not involving Greece government, it would mean that you're discussing on some kind of deal that you would have if and when Greece leaves. Okay, we have more questions. In the meantime, please do ask your questions. We still have 8 minutes until the end of the webinar. We have the question about what about other euro pairs, non-USD pairs. I have right now in front of me Euro Australian dollar. Euro Australian dollar, you can see that it's just moving, well, kind of on a sideway for the last how many weeks? 1, 2, 4, 5 weeks. It's a sideway movement of more or less 500 pips. If you look at the pair on monthly time frame, you would see that earlier this year in April, the pair bounced off my favorite 50-month moving average. And we also have another harmonic over here on a monthly time frame. You can see that this is just a fake it, don't really count it. If that is confirmed, which is likely to be confirmed, there would be possibility of us seeing Euro Australian dollar further down, and this was 2000 pips movement. That would mean that we would see from here to down there 2000 pips, and it's more or less to the support level that you see. This is the technical expectation, okay? Everything depends on how Spain will react, what the developments will be from Spain. This is my personal attention level rather than Greece. Greece is a minor European economy. They do not have major movement. They do not have major production element or a major economic add-on to Europe. So that's why it's not creating major volatility right now. Even gold right now, where it would be generally a safe haven asset, let's look at it. It's not even moving or reacting at all. You can see for the last couple of months, it's just moving between 1,150 to 1,220 zone, and this is not usual. I would like to just bring your attention to the 2008 levels. Look at the 2008 levels. Just right after the global crisis, we had this movement, major movement. Gold jumped always for each crisis by 2,000, 3,000 pips, or in other words, $200-300, $200-300 in a month movement. On August 2011, we had gold moving by $300, jumping from level to level. But right now, even over the weekend, when it became valid that Greece would not be able to pay, only movement we had on gold was 130 pips or $13 movement, which is extremely small. Now look at even today's NFP figures. Today's NFP figures created pretty much the same amount of volatility as the overall weekend gap that we had from Greece crisis. And the reason is that Europe is better prepared right now than it was before. The ELA, emergency liquidity funds, etc., from ECB are better structured. You can see that they stopped the emergency liquidation and every other direct impacting actions from ECB to Greece right away. If this crisis would have came in 2013, we probably would have had euro dollar at 0.50, 0.60 level. It just shows us that fortunately we have better opportunity here. So before we conclude this webinar today, let's put it this way. If I were to trade right now, I would be most likely focusing on longing Japanese yen for one major reason. First off, Japanese yen has been oversold up until now. It is at such a level that everyone is just talking about it. Let me bring you back to the level so that we can see on weekly time frame or even on monthly time frame. If you look at it, Japanese yen is back to its 2007 levels, pre-crisis levels, and the average before the crisis, the average level of Japanese yen was not 125, 130 zone. It was the level of pivotal level you can see over here is 115, 120 zone. So it gives us an opportunity or belief that Japanese yen would appreciate slightly. At least we would expect a drop still from its current level to 120 zone, if not 114. My major level would be 117 level that I would be targeting. It's 500 pips from now. So for the coming weeks, we could see Japanese yen, especially USD Japanese yen, dropping to 117, 118 level. On Euro Japanese yen, similarly, we would see, let's see, Euro Japanese yen, if we could open. If you look at it again, we have pre-crisis levels almost on Euro Japanese yen. The levels, we have it before the crisis since 2011, 2001 till 2011. It was ranging between the after crisis levels, so it was not really major movement. So we could still see Euro Japanese yen going down. We have a 122 support zone over here, but I would expect Euro Japanese yen going to 130 zone as a direct target. Those of you trading candlesticks could also see that last month's monthly closing candlestick was quite interesting as well. It's not a reversal candlestick yet, because for reversal candlestick or trend reversal candlestick to be confirmed, we would see that we would need another candle afterwards to confirm it. But when I look at it, I could expect at least some drop from here to the level of 133. It's another 300, 400 pips drop that we would expect to see. And another part is that the level that we have on Euro Japanese yen is right on the previous support. We have had support on 2014. Which month is it? It is August and September, as well as October, from basically July to till October 2014, which has turned into a resistance level right now. So possibly we could expect Euro Japanese yen going further down, reversing from its current resistance level. We'll accept one last question and we will finish up the webinar from here. Alex is asking, do you think is it probable for the other Eurozone countries to follow Grexit? My only fear right now is Spain, because Spain and Greece has quite similarity. First off, both are heavily dependent on public sector jobs. In Spain, though, the major difference is that the economy is running. It's not only dependent on public jobs, but they also have major entrepreneurial activities as well. So that makes me at least feel eased. However, when I was living in Spain back in 2011 and 2012, I did see the similarity between the Greece now and the Greece then, the Spain then. You could see the people aiming to put more pressure on the government, try to increase the wages or decrease the taxes where the government actually needs more tax revenue in order to be out of the trouble. So Spain would be my only fear for now, if there is anything. Okay, that's pretty much it for today. I'm gonna share my contact details for you as well. You can add me on Skype as well, Y Rahimov, if you could type online. We have also Skype group and so on. I would be happy to add you in the Skype group, where we sometimes share some opinions as well and give you more information. We have special offer with Orbex right now as well. We are doing a complete training package with Orbex, where we take the training of the traders from simple with no experience, basically introduction to Forex, and we go all the way to upper intermediate or pre-professional level of Forex trading. So if you want to learn more information about that specific training package, please go to orbex.com and go on the live chat and ask the support team for more information about it. This training is completely free of charge. If you come directly to me, it would be paid over $2,500, but with Orbex, because of our special agreement, it's completely free of charge. So go ahead and try it and stay safe for now, because we will have major movement in the market, whether it's yes or no. There is a likelihood that we will have a major gap this weekend, and the only way for it is for us to protect ourselves is to make sure that we are not heavily exposed to the risk. Make the right risk management for yourself. Thank you very much, everyone, for being with me today. It was great spending the last 1 hour 5 minutes with you. Join us for more webinars. Follow me, follow A to Z Forex, and follow Orbex. Stay profitable, stay sound. Take care for now. Bye bye.